I'm Julia Coakley, Director of Operations, and on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon, which is being delivered by AM Best. Before handing over to our presenters today, I'd like to run through a few housekeeping points. Please ensure your microphone and cameras are off, and if you'd like to ask a question, please use the chat button at the bottom of your screen. Your questions will be answered during the Q&A session. However, any questions of a commercial nature, including fees, however, cannot be discussed, but the team will be happy to engage offline and there will be contact details at the end of the slide deck. The slide deck will also be issued post-event. This presentation is accredited for CPD points if relevant to your ongoing professional development, and the recording will be available on our website and on our MGAA YouTube channel. As always, we will send you a survey to gather your feedback. This really does only take 2 minutes, and I can't impress upon you enough how important your feedback is to us at the MGAA so that we can make sure that we're putting on the appropriate events that are of interest to our members. So today's briefing is being delivered by AM Best and is an update on AM Best's new performance assessment for Delegated Underwriting Authority Enterprises, DUAE. I'd like to introduce Nick Charteris-Black, Managing Director, Market Development, EMEA, Miles Gould, Director, Analytics, Barney Unwin-Hoskins, Financial Analyst. Nick Charteris-Black joined AM Best in February 2008 and is responsible for the company's commercial development in the EMEA region, including strategy, business development, client management, marketing, public relations, and market research. Nick also has management responsibility for the company's representative office in Dubai, that's DIFC, and the development of AM Best's informational services business in EMEA. Nick also serves on the boards of AM Best's London and Amsterdam-based subsidiaries. So at this point, Nick, if I might hand over to you.
Thank you, Julia. Thank you for the introduction, and thank you for all of you on the webinar today, and also thank you for the MGA more generally. I think this is the third briefing we've done during the year. 2 have been, including this one, remote, virtual, and one in person in our office in July. My preference is always in person, so hopefully we won't do a 4th this year, but hopefully we'll do an in-person one again, excuse me, at the beginning of next year. Most of the presentation will be delivered by my colleagues Miles and Barney, who Julia was introducing. Miles has been with AM Best for 9 years. He's a director in the analytical team, and he is our lead, effectively the analytical lead outside of the Americas for everything we're doing in the DUAE MGA space, and working closely with Miles is Barnaby, who has been with us, financial analyst, who's been with us for 2 years. So before handing over to these guys, a few further introductory comments from me. If you could just move the deck forward, whoever's driving, please. Yeah, we can miss out this bit. I won't go through all of these. The learning objectives are included for those of you who are seeking to obtain, I think, CII CPD points or whatever that is, so that we'll return to those at the end. There is no test, but if we can move on, please. Right, so to get to the the meter today, there's sort of 3 main sections which Miles will lead off with, starting with the scope and process for our performance assessment, and then methodology and the key assessment components, and finally to run through, which I think in many ways is the most interesting part, examples of some of the published performance assessments to date, which we'll wrap up with. And then we're very happy to take questions at the end through the chat function, as Julia mentioned. So before finally handing over to these guys, a couple of other comments from me in terms of background. So one question is kind of why are we doing this now? Why have we launched this service? And a number of reasons set out on this slide, but the top 2 are the most important, really. We, as everybody else has noticed, and I don't really need to tell this audience, but the increasing role of DUAEs, MGAs in the insurance value distribution chain. And this, for us, manifested itself particularly during our core credit rating activity. So when our analysts were meeting with rated insurers and reinsurers and talking as part of the credit analysis about business profile and distribution, increasingly the topic of MGA distribution was rising to the surface. So if nothing else, we needed to increase our understanding of this part of the sector, and in many ways to then launch a service as a spin-off from that to increase our own knowledge base. The final 2 points are it enables us to provide an additional service offering in our chosen sector. We're only involved in the insurance sector. As probably most people know, we don't rate banks, we don't rate sovereigns or corporate debt except from issued by insurance companies. And hopefully we can be, as it says at the end, be a constructive force. I guess the jury's out on that, but that's our ambition, that we do provide constructive comment, feedback and opinion on this part of the insurance sector. And a little bit of background in terms of how we've got to where we are today. Just to recap, really, we've been on quite a journey, which started in the public domain March of last year when we released the draft methodology, which is a normal process for a credit rating agency developing new methodology. That was put out for consultation. We had a considerable amount of feedback from market participants from many sectors of the market and in many parts of the world. This is a global initiative, so the consultation process was done on a global basis. We also then conducted during the second half of last year a beta test with 5 or 6 willing participants. So these are MGAs who volunteered to go through the process really on our behalf as a test case, and with some refinement to the process and methodology that led to the release in February, 1st of February this year. And to date, as will be covered later on in the presentation, we have published 5 globally, which we'll give some more detail on that as we get to the end. So with that, I think that was everything I was going to say, and I will pass over to Miles, please.
Thanks very much, Nick, for that introduction. And as mentioned, I'm now going to spend a few minutes just to walk through a bit more detail on the scope and the process of PA for DUAE. So perhaps just starting with a few of the terminologies that we're using in this particular segment. And first of all, I guess starting with quite a mouthful, Delegated Underwriting Authority Enterprises. So perhaps as Nick has already alluded to, this very much captures MGAs, cover holders in the context of the UK market. But this is a global methodology, and depending on what market we're looking at, the terminology used does vary. So DUAE is an AM Best coined term really to capture MGAs and equivalent enterprises across the globe. And more specifically, the definition of a DUAE is a third-party entity appointed by a reinsurer, insurer, or multiple of those through contractual arrangements, typically to perform a range of underwriting, claims handling, and other administrative functions on behalf of these partners. And shown on this slide here in the blue boxes, you can see some of the roles and functions that we would expect to see from DUAEs or MGAs, and the methodology enables us to assess these. It is worth noting that we won't necessarily see these functions in all instances. We do note that the business model and scope of function does vary company to company, relationship to relationship, but the way in which we've constructed the methodology is to enable us to assess those functions and roles within an MGA where applicable. And the only other point I'd make on this slide as well is just to emphasize that the first blue box, so binding coverage, for a company to fall within the scope of our performance assessment for DUAE, we would typically expect to see the ability to underwrite bind coverage on behalf of its carrier partners. So that's an important part of this process. So this next slide, I guess, just supplements what I mentioned before, that depending on what market you're operating in, the terminology does vary. And as mentioned in the UK London market, the terminology is MGAs and cover holders. But more internationally and in the US, you'll see other terms used, such as program administrators, program underwriters, underwriting agencies, so on and so forth. And this is really just to show the types of entities which we would expect to fall within the scope of the PA for DUAE. So just bear with me as we define one more term here. So performance assessment, PA for short. So I guess the first thing to note here is that AM Best is a credit rating agency, very much focused in the insurance segment, as Nick alluded to. But it's worth noting that in the context of DUAEs, we're not providing credit ratings. Now, the reason for this is that the business model is very different from an insurance carrier, a reinsurance company, which credit ratings are applicable to in the context of being risk-bearing entities. Obviously, the nature of an MGA is quite different. And in that context, we're using the terminology performance assessment, which provides a forward-looking, independent, objective, non-credit opinion of a DUAE. And this speaks to the ability of that entity to perform services on behalf of its insurance partners. So we're not using the term credit ratings in the context of DUAEs. The phraseology is performance assessment. So just touching on the other points here very briefly, the performance assessment is determined with reference to 5 key components. These are assessed. They include both quantitative and qualitative elements, and they are assigned a score on a points basis, which speaks to the performance, the serviceability, and alignment of interest in relation to its partners. And then a simple sum of these points across each component that determines the overall performance assessment. And in the subsequent slides, we will also touch upon the scoring framework and the assessment categories that we're assigning in this process. So just to spend a little bit more time in terms of what the process looks like, and really, this slide is intended to give a view to an MGA entering the process, what the sort of key steps and milestones would be as you walk through an initial assessment with AM Best. So we'll go through the chart on the right hand side in a moment, but just to call out a few high level points to begin with. So it's worth noting that it's an interactive process. So it's not purely based on public information. It's public information, formal engagement with the company through what we refer to as a formal management meeting, and there is expected to be ongoing dialogue as well. So coming back to that original definition of a performance assessment, it's not a point in time view, it is forward looking. So we would expect to understand future strategy and developments as a company progresses through that strategy, influencing our assessment. In addition to that, we'll talk through some of this in more detail as we go, but there is a data request which we would supply to the company in the early part of the process. This includes both quantitative and qualitative elements, and really is the information we require to be able to determine a view on the 5 assessment components that determine that PA. So again, just hold fire on what those 5 components are. Barney will talk to some of that shortly. So just to walk through the steps at a high level, the first 2 points, 1 and 2 on the diagram on the right hand side, is where there's sort of significant involvement and engagement directly from the MGA. So as mentioned, once we've prepared a meeting agenda and info request, which is tailored to the specific MGA, it's then obviously the responsibility of the MGA to prepare that information and provide that to us. We do expect that to take varying amounts of time depending on the operation. More complex operations, there would likely be more data required, and that may take a longer period of time. And also depending on the availability of the information we require, it may take companies varying amounts of time to prepare that. But it is a standardized format, and I think once a company's been through the process in year one, we would expect them to be quite familiar with that, and it to be a relatively streamlined step in subsequent reviews. So that's step one. Once we've got that information, the next sort of engagement, if you like, is to prepare and present to AM Best in what we refer to as a management meeting. So at this point, we've obviously got a chunk of data and information that's been provided to us. The management meeting is really an opportunity for the analytical team at AM Best to have airtime directly with the management of the business, and to understand the strategy, the mechanics of the business, both currently and prospectively, and that will often enable quite a bit of additional insight to supplement the data requests that we obtain in part one. So that would typically be done in a face-to-face format, where possible, and to give an indication, that would take somewhere in the region of half a day to a whole day, depending on the complexity of the MGA. So the next step is really where the baton is handed over to AM Best. So the analytical team responsible for the account will then spend quite some time behind the scenes, analysing the information, preparing an assessment recommendation, and presenting that to an assessment committee, which is the body that ultimately determines what the performance assessment outcome is. So once that's all completed, it's then back to the management of the DUAE. We would disseminate or share the result with the company. So that would be via a phone call in the first instance. We would communicate the outcome and then talk around some of the strengths and weaknesses that were identified in that process. And then there would also be a formal notification letter and associated materials to assist with that visibility after the telephone call. So step 5, this is really again in the context of the initial assessment. This is where the DUAE then has a chance to review those materials and to contemplate the result that's been provided, and ultimately determine whether they wish to go ahead and publish the assessment, whether they'd like to keep it on a private basis, or reject the assessment. And if a company goes ahead and accepts it on a public basis, which we hope they do, that then results in the performance assessment being published on our website, as well as a press release and performance assessment report becoming available for interested stakeholders. And then finally, the linking pin, if you like, in this diagram, number 6 here, is what takes us from that sort of initial review through to the subsequent annual review. Now, the performance assessments are typically conducted on an annual basis, so we'll do a full workup once a year, but in between that, and as mentioned, performance assessments are subject to ongoing monitoring, so we would expect to keep an engagement with the MGA through the interim period. And if something does materially change, this can lead us to go back to an assessment committee to consider whether an assessment category change is necessary. So I think that's everything on that slide. Obviously, I understand it's quite a lot of detail, but hopefully that's helpful, just in terms of giving a view of what the process looks like from the perspective of an MGA entering the process. So just a couple of additional points to flesh this out as well. We've touched on the fact that an assessment can be on a public or private basis. And there is obviously more information available in the public domain, the press release and the assessment report, if that's accepted in that particular format. Similar to on the credit rating side, a performance assessment is assigned an outlook, and that outlook can be positive, stable or negative, and that really reflects our view of the trajectory of the performance assessment over time. And then linked to the ongoing monitoring that we mentioned, an assessment can be placed under review. That terminology again is similar to on the credit rating side, and this might occur if a significant event was to arise, for example, a very material merger or acquisition, perhaps of the DUAE, itself, or of the company being acquired by someone else, that could lead us to place the performance assessment under review, whilst we consider the impact of that over time. It's also worth noting that once a company has entered the process, there is no termination period. So as we mentioned, it's subject to ongoing monitoring until such point that the company asks us to withdraw the performance assessment. And the very final point there to note is that if a company has a performance assessment on a public basis, and they do request at some point in the future to exit the process, we will need to do a final assessment update as part of that. Okay, so this is sort of leading into the methodology piece, I think, quite nicely here. And the relevance of this point will very much depend on the individual MGA or MGAs coming into the process. But just one point to note here, that if an MGA enters the PA process with multiple legal entities, so perhaps they've got MGAs in different jurisdictions that all form part of one group, the performance assessment as a starting point is typically assessed on a legal entity basis. So we will assign PAs to legal entity, and where we have a group with multiple legal entities, the assessment will typically be conducted on each individual operation. With that being said, the methodology does give us the flexibility that where we have a group with a number of MGAs that have significant commonalities and there are clear strategic rationales, we may take a group view. So I guess the main takeaway for this is that for an MGA group entering the process, depending on the commonalities and synergies, we may take an analytical view to assess those companies on a legal entity basis, or perhaps as a whole in the context of a group. So with that, I'll pass over to Barney to take you through a bit more detail on the methodology and key assessment components.
Thank you very much, Miles, and good afternoon, everyone. The next few slides will just provide you with an introduction to the 5 key components that we look at that Miles mentioned earlier. We'll look at the scoring framework and the relative weighting for each of those components, and then a little bit more detail on what we look at under each one of those 5 assessment components as well. So this slide here sets out the 5 assessment components that we look at in order to form the performance assessment for each of the DUAEs. So the first is the underwriting capabilities. Then we look at governance, internal controls, financial condition, the DUAE's organizational talent, and the depth and breadth of the relationships that it possesses. This slide sets out the scoring for each of those 5 components. So you'll note that the first 3 components, underwriting capabilities, governance, internal controls, and financial condition, are assessed out of a maximum of 10 points in increments of 2, so 2, 4, 6, 8, or 10. And the latter 2, which are organizational talent and depth and breadth of relationships, are assessed out of a maximum of 5 points. So those first 3 components carry double the weight of the last 2. A higher number of points across these components indicates the DUAE's relative ability to perform services on behalf of its partners through things such as effective business underwriting, strong financial condition, excellent access to business, high levels of service, and strong business relationships and governance. The individual scores from each of those 5 components are summed, and they result in an assessment range, which is shown in the 3rd column of the table on the left-hand side of the page. That then translates into an assessment symbol ranging from PA1, which is the highest scoring, down to PA5, which is the lowest scoring, and also a corresponding assessment category ranging from exceptional for PA1 to weak for PA5. So for example, if you had a DUAE that scored 30, that sits between 27 and 33. So that would be a PA2 with the excellent assessment category. The PA scale outlines the DUAE's ability to perform services on behalf of its insurance partners. It comments on the alignment of interests with business partners, the degree of underwriting expertise, financial performance indicators, appropriateness of its governance and internal controls, and also the strength of distribution and management expertise as well. I think so far that's probably all been fairly straightforward and easy to get your head around. The next 5 slides provide a little bit more detail on each of the assessment components and what we look at in order to form our assessment. So each one of these slides will list out some elements that we might look at. I think it's important to highlight at this stage that this is not an exhaustive list of what we look at, and not all the points will be relevant to all DUEs. So part of this process that Miles mentioned at the management meeting is understanding about the DUE from the DUE's management and forming an assessment of what is more important to any individual DUE and what is less important to some. For example, some DUEs might not have in-house actuarial expertise, and therefore that element of the assessment might not be applicable. So going back to underwriting capabilities, AM Best's view is that a primary reason for partnering with a DUE, if you're an insurance carrier, is access to profitable underwriting business that you cannot access on your own, or where you benefit from the product class or geographic expertise of the DUE. So that's why this is an important part of the assessment, and it's one of the 3 components assessed out of 10, as noted earlier. These elements listed on the right-hand side for underwriting capabilities are a mixture of quantitative elements and qualitative elements as well. So some of the more quantitative elements include underwriting results, where we would request from DUE sort of the last 5 years worth of premium levels and loss ratios, and we'd want to discuss those with management and understand the drivers behind improvements over time, or what the company is doing to improve performance if it's not where it's expected to be. We'd look for historical trends and see how those are developing, and also compare performance against carrier expectations and targets, or against peers, or against general industry data as well. Another more quantitative aspect of the assessment is commission structures. We'd want to understand how those incentivize profitable underwriting, both for the DUE and how that benefits the carrier and the DUE as well. Some of the more qualitative elements that we look at under underwriting capabilities include the use of data and analytics, the use of technology in the underwriting process, and the underwriting competitive advantage that the DUE possesses. What's the secret sauce that makes that DUE better, or a better partner for its insurance carriers than others? As I mentioned, some of these might not be applicable. For example, participation in profit sharing or claims management might be outsourced to a TPA. The second component that we look at is governance and internal controls, and this reflects AM Best's view that a DUE that is effectively identifying, monitoring and managing risks is a better partner for insurance carriers over the cycle, but also better able to withstand shocks as well. This again is scored out of 10, and it's a more qualitative component than we saw for underwriting capabilities, which was a mixture of quantitative and qualitative elements. Here again, we're interested in understanding alignment of interests, as we were for underwriting capabilities, but it's a bit broader when we're looking at governance internal controls. We want to understand how interests are aligned between the carrier and the DUE, but also with brokers and other stakeholders such as employees or strategic investors. We want to understand what incentivizes risk-taking and how that is balanced across all the different stakeholders relative to the DUE. We would also want to discuss the DUE's systems infrastructure and its platforms, and to what extent the systems that are in place allow for real-time monitoring of underwriting results, claims management, financial position, all those different aspects that form part of the DUE's risk profile. We'd also be interested to understand to what extent carrier partners and other stakeholders are able to access those systems and perform their own reviews in real time as well. That leads us on to the next point, where we're interested to discuss the results of recent audits or other reports performed by external parties or by management. We want to discuss the findings from those, both positive and negative, and understand what's being implemented to continue strengthening those positives and how any weaknesses are being remedied. We would typically look for the existence of well-documented policies and procedures that set out clearly and consistently how the DUAE conducts its operations, and would also be looking for a disaster recovery plan and to understand how that is implemented and how that ensures continuity in a stress scenario. Something we often discuss with smaller DUAEs is key person risk and to what extent that exists, and if it does exist, how it's being managed. The third component that we look at, and the third and final component assessed out of 10 points, is the DUAE's financial condition. And this reflects AM Best's view that a financially sound DUAE is more likely to be a stable long-term partner for its insurance carriers than a financially weak DUAE. This typically begins with a review of the financial statements of the DUAE, and we'd be looking to understand the cash flow and how cash flow generative the business is and whether that's sufficient for its needs. We'll be looking to understand the stability and sources of income available to the DUAE, and we'll be looking for any obligations on the DUAE. One of the obligations we often see is the presence of borrowings, and where that is the case, we would run metrics to understand the level of leverage and coverage of interest payments, but we'd also be interested to discuss with the DUAE management their appetite for leverage and how they intend to cover interest payments over time. I think it's important to highlight, particularly in financial condition, but in the other assessment components as well, this is relative to what the DUAE is trying to do. So you might have one DUAE that's growing inorganically very quickly through acquisitions, and the cash flow needs of that DUAE are likely to look different to a DUAE that's growing organically over time. So it is relative to what the company is trying to do and what the strategy is, and that's one of the things we often discuss at the management meeting. Miles mentioned about how we might view groups as part of the assessment, and we can do that through the financial condition assessment as well. So we can look at the financial strength and the positive or negative impact arising out of related parties, whether they be shareholders or other strategic investors as well. The first of the two components assessed out of 5 is the DUAE's organisational talent. And I think it's fairly self-explanatory as to why AM Best looks at this, but in general, our view is that an DUAE with lots of talent is likely to be a better partner for its insurance carriers over time than one without much talent. Again, it's important to highlight here that this is relative to the size and complexity of the organisation. So we would expect a DUAE writing a broad range of programs and different products from different offices across the globe to look very different to a more focused DUAE operating in its domestic market, potentially with a very narrow geographic concentration as well. Other things that we look at here include the tenure of staff, availability of training programs, management expertise, and also the organisational structure of the DUAE, and to what extent that allows for dynamic and effective decisions to be taken. It's important to highlight here that underwriter expertise, something we view as very important to the assessment, is considered under underwriting capabilities rather than in this component separately. The final component that we look at is the depth and breadth of a DUAE's relationships. And this is assessed out of 5. And again, it's a more qualitative assessment, but also there are quantitative aspects to this as well. Typically, to understand the breadth of the relationships, we'd be looking at the number of programs that DUAE has, how many different markets it operates in, and the number of different partners it works with. But we're also interested to understand the depth of those relationships. So how long-standing are they, and to what extent has sort of trust or goodwill been built up between different partners in the relationship. Typically, we view diversification, whether that's by market, by program, or by geography, favourably, and would also be looking to understand the retention of clients over time. What we've covered so far is the methodology that we use for all established DUAEs. Reflective of the fact that a new formation, a startup DUAE might not have the same level of historic data, there are some additional requirements we have in place for if we want to perform an assessment on a new DUAE. We'd typically require a detailed 2-year business plan, financial statements for any completed fiscal years that are available, interim financial statements to give us an indication of where the DUAE is at the moment, and we'd ask for extra information about the experience and track record of the management team and also the track record of underwriters, and we'd be looking to understand the sufficiency and preparedness of infrastructure in place. Depending on the DUAE, the strategy and the model being followed, we'd also expect access to potentially the board of directors, strategic investors or other important third parties. Once we then have completed that performance assessment, there will be a greater focus on monitoring against those plans that we were given and the financial targets to ensure they are being met over time. That was everything on the methodology, so I'll hand back over to Miles for some examples.
Thanks very much, Barney. And the final section of our presentation today is really to try and put some of that into context through examples of the published PAs. So it's worth noting, as Nick mentioned at the start, that the methodology has only been live since February of this year. So it is still relatively early in terms of the number of PAs that have gone fully through the process. But so far we have 5 published PAs. And it is worth noting that does cover more than 5 legal entities. There are some enterprises here where you have a variety of legal entities that have been grouped, and that means that the coverage is more than just one entity per company. We also touched earlier on the fact that this is a global methodology, and I think it's good to see at this stage already a relatively diverse mix in terms of the enterprises which have been through the process from a geographical basis. And I guess just to sort of flesh that out a little bit, we've got 3 assessment groups which are domiciled in the US. So a name which I'm sure many of you are familiar with is Amwins. We've also got Cargo Risk Corp and First Indemnity, all domiciled and headquartered in the US. In addition to that, and a little bit closer to home, we've got Castell, again another name that I'm sure you've heard of in the UK market. And Castell's assessment also includes its Netherlands-based operation, Castell Underwriting Europe BV. A little bit further afield, we have Delta International as well. So this is an Asia-Pac based MGA group with operations in New Zealand and Singapore. The table in the middle of this slide gives a little bit of colour in terms of the assessment outcomes which these companies have obtained so far, and you can see that we've already got a relatively significant range of assessment outcomes on these so far. So Amwins, obviously at the high end of the scale that Barney spoke through with the PA1 exceptional assessment, a couple of enterprises there, Castell and Delta, falling within the PA2 excellent, and Cargo Corp and First Indemnity with the PA3 strong. As you can see at the moment, all of these enterprises have got a stable outlook. So just to add on to this as well, and I think it's fair to say, when we went through the consultation phase with the market, before any of these assessments had been released, I think in various jurisdictions, we got quite a lot of constructive feedback from the market. And I think one of the points that we saw from several interested parties was about the applicability of the methodology for different size and shape operations. And in particular, I think we received quite a number of questions around whether smaller companies would be able to obtain robust scores in this assessment framework. And I think it's good to see, with the first 5 published examples, we've got a real mix of business models, size, scale, and geographical operation as well. So this slide really goes to show that in the case of Amwins, we've got a very large operation there, in excess of 2 billion of processed premium, writing a real mix of lines of business within the US market. And then at the other end of the spectrum, with Cargo Corp and First Indemnity, we've got some smaller operations there, but are very much focused on a particular area of expertise and market. So Cargo Corp, around 10 million of GWP there, focused on marine business in Latin America. First Indemnity, around the 50 million mark of premium, again focused on a specialty area, professional liability within the US. Castel and Delta, somewhere in the middle of that, with slightly more diverse business models and geographical footprints. But I think the key takeaway from this is that we believe the methodology is established to be able to assess various different shapes, sizes, business models for enterprises, and I think even with this first handful of assessments, that's clear to see. So this next slide I won't spend too much time on, but this is just to give you a little bit more of a feel for what the underlying assessment components across that peer set look like, and to link that back to the methodology that Barney mentioned. So I won't call out any specific companies here, but this is more for a takeaway just to see where the strengths sort of emanate from across this this group of published assessments. So this final slide is really just to give you something to perhaps go away and take a look at after this session if of interest. I mentioned obviously when we were going through scope and process that for all of those entities which go for a published assessment, that will result in a press release and also a more detailed performance assessment report. So these are only sort of partial snapshots, if you like, of those documents. But it's worth noting that these are all freely available to interested stakeholders on our website. And if you are interested in any of these companies or interested in entering the process, I'd encourage you to go and take a look at the content and detail contained within those. I guess at a high level, the press release is more of a summarized view, really communicating the performance assessment outcome and at a very high level the key drivers of that. Whereas the performance assessment report goes into a bit more detail, breaking down the key considerations across each of the assessment components, including positive, neutral, and negative factors. So with that, I'll hand back to the team for Q&A.
Thanks very much for that, Miles. Thanks. A very in-depth look at the PAs on DUAEs there. Thank you very much. I do have some questions, but to our delegates, please do feel free to drop your questions into the chat box. So I don't know whether this is potentially how long is a piece of string, but if we are assuming that all of the requested details and items that you do request have been passed over, how long does the initial performance assessment take to complete?
Yeah, maybe I can take that one as a start. So I think the first thing to note is that it will vary on a case-by-case basis, depending on the complexity of the operation. But I guess to give a general indication, it aspire to the analytical process taking somewhere in the region of sort of 4 to 5 weeks. It's worth noting that that's post the data gathering and management meeting having taken place. I think it's also important to note that that is a view of elapsed time in the analytical process, if that makes sense. So it's not a continuous block of 4 or 5 weeks where either AM Best will be on site reviewing the MGA or a period of time that the management team need to dedicate directly to us. It's sort of a view of time elapsed from entering the analytical process to receiving the performance assessment outcome. Hopefully that's helpful.
Thank you, Miles. Another question, which I think is a bit of a three-parter, and I think it's probably, or certainly from someone who might consider themselves to be working at a smaller MGA. So is there a risk of a two-tier market with smaller DUAEs unable to hit higher scores? I'll just give you the other two parts. Is a small balance sheet an impediment to a high financial condition score? And the third part to this question is, how does AM Best view key person risk for smaller DUAEs? So do feel free, I'll give you those questions again should you need me to.
Yeah, absolutely. And Barney, Nick, feel free to chime in as well. I think there's plenty of question there to go around. So look, I think we've perhaps touched on some of those elements in Barney's methodology part of the presentation, and also in the published examples. But I guess the key points are that we view the methodology to really cater and provide us with the necessary tools to assess all shapes and sizes of DUAEs, and indicated in the published examples to date, and also with further companies coming through the pipeline, we've seen that smaller MGAs are clearly able to achieve robust scores. So I think one of the sort of questions that we've had around this previously is, do smaller MGAs which don't have diversification of product line or geography, does that impede the assessment? And again, look, I think the way the methodology is constructed is that where diversification leads to a positive consideration, we can factor that into the assessment and view that positively. But not all diversification is positive. And conversely, the methodology also recognises that focused niche enterprises, which may be smaller in nature, where there's a clear competitive advantage, we can also reflect that in the assessment as a positive as well. So I think it's very much on a case-by-case basis, but the positives and the negatives can be considered for any size of enterprise. And maybe just briefly on the key person risk consideration as well. I think this is a topic which came up through the consultation period as well. Again, if we see operations where there is a key person or key persons risk, that's something that's likely to be a greater focus for us at the management meeting. And what we'll really be looking to do is understand and obtain a view on the risks associated with that, and also, very importantly, the mitigants surrounding that. So we do understand that the nature of MGAs in some instances is very much relationship driven, and that may be in part a reason for a key person risk, but really understanding what mitigants are in place, including succession planning and how impactful change at that level would be, is what we want to get to consider any challenges that may present for the business. Barney, I don't know whether there's anything further you want to add on that one.
I think you've covered that well, Miles.
Thank you for that, Miles and Barney. So another question, the submitter is saying that they appreciate you might not be able to say, but if you can, aside from the 5 that you've already given as examples, can you say how many more DUAEs you are working with on these PAs at the moment?
I'll probably take that one. I think the answer is not exactly, but we have a pretty robust pipeline throughout the world. I think principally in the UK, London market and the US, but not exclusively. We do have, what I can say, we do have one other, I think just one other that has been through the full process and has elected to keep it private, and that is an option. So in some ways it's a tip of an iceberg what's in the published domain, but generally a number of different stages coming through the process with us.
Thank you for that. I think you've possibly touched on this, but another question. So how detailed are the performance assessment press releases and assessment report? But I guess more importantly, does the company get a chance to review these? So I think you've touched upon this, but if you could expand.
Yeah, I can have a go at that. So the press release is less detailed than the assessment report, and the press release is very much the high level drivers. So a couple of sentences, maybe even one sentence on each of those components. What do we view to be the really material drivers of the performance assessment report, of the performance assessment? And then the assessment report goes into a bit more detail, maybe a couple of paragraphs on each of those components. As Miles said, those are available online on the AM Best website, so you can go and have a look at those and get a sense for that yourselves. I think on the process side, it's important to highlight the process we're following for the press release and the assessment report mirrors what we do on the credit rating side. So it's something that's tried and tested within AM Best, and the company does get a chance to review those public documents before they go out. So we ask the company to review them for any factual errors or any commercially sensitive information or confidential information, and we can then remove that or correct that as needed. I think it's important to caveat that where we have opinions, where AM Best has opinions of what drives the performance assessment report, we're not necessarily asking the company to comment on that, but we do tend to discuss that with the company as we go through the process. So before we go to an assessment committee, we would have a call with the company setting out what we view as the positives and what we view as the weaknesses, and give the chance for the company to consider those and provide their feedback on what we're thinking as well. So we wouldn't expect the company to be surprised by what's in the press release or the assessment report at the same time. But yes, they do get a chance to review them.
Thank you
Miles,
very
I
much.
don't have anything.
Sure, that's very reassuring. So another question. So this is, considering the number of DUAEs in the market globally, per your identification that this is a viable product, what number of PAs do you consider to be a critical mass to enable a proper market assessment? Also, how long do you consider a PA to last for, and when do you consider the PA needs to be completed again to remain valid?
Okay, well, maybe I'll address the first one, and then perhaps Miles and Barney the second one. So the first one about critical mass is we're not fixated on any particular number. It's something that we envisage will grow over time. It very much think will mirror the growth of credit ratings in the sort of major markets. So yeah, clearly it adds more value the more benchmarking that can be provided, for example, will come through, the growth both within individual markets and globally. But as I say, we're not fixated. It's on that particular number. It's a slow build up. It's more or less in line with expectations so far, but we are obviously we're hopeful and confident that it'll grow. The number of published PAs will grow during the next 2 years. We're very much looking at it on a sort of 3 to 5 year basis, and we are hopeful, based on the interest that's been shown to date, that those numbers will increase, and hopefully that people will choose to publish. As I mentioned earlier, there will be some that are part of the the output, but they will remain in the private domain. But we would hope that people will publish. Regarding the second point, I'll pass back to you, Miles, on sort of how long is a PA valid, I think the question was.
Yeah. So it's a good question, and the answer mirrors the case on the credit rating side as well. So I mentioned earlier that sort of our analytical process is very much geared towards a 12-month or annual review. So we do a full workup annually, but as also indicated, the performance assessments are subject to ongoing monitoring, and that could lead us to do an event-driven update at any point. So the way to think about the validity of a performance assessment is that it's valid at any point in time, and at any point that it's no longer valid and requires a change, it's incumbent upon us to represent that to an assessment committee and make a change. So there's no defined expiry period. Performance assessment detailed on our website is valid at any point that you look at that. Hopefully that explains it.
Thank you for that, Miles and Nick. I think we have time for perhaps a final question. I think we have one more question. How do you see the outlook for the DUAE/MGA market?
That's a good question, and conscious we've only got a few minutes left, so I'll give you a relatively short response on that. Look, I think we've seen high levels of growth and a lot of positive development in the MGA space, both in terms of activity and penetration across a number of global markets, the US, the UK, We've seen strong growth in those markets and activity over the last couple of years. And this has been across established businesses, startups, and also we've seen a high level of M&A as well. Appetite to acquire, but also merge some of those operations. I think a bit more broadly in Europe, there are markets where there's stronger penetration, and there are some which are a little bit more nascent or emerging. But generally, I still think the trajectory has been positive, and we'll continue to see that over the near term. In terms of looking forwards, I think the role and the presence in the industry again remains very much tied to the ability of MGAs to evidence that alignment of interest that we touched upon earlier, and demonstrate tangible value to the carriers that they're ultimately providing those risks to. So I do think future changes in the rate environment will provide a test for MGAs, particularly where profitability may be more squeezed for some lines of business. But I still think there's a positive growth story here overall. And we've spoken a lot, I think, over the last few years about talent, technology, and a widening and broadening appetite for capacity providers in the MGA space. So I think collectively those things have been a positive story, and we'd expect that to continue over the near term.
Thank you for that, Miles. So I think now we're just going to finish on the learning objectives, which I think might be the penultimate slide. So while Barney's putting this onto that, thank you for that, Barney. I'd just like to say huge thank you to Miles Gould, Barney Unwin Hoskins and Nick Charteris Black for presentation today. Very in-depth, very interesting, and it's good to see how you're progressing with the PAs in the DUAE market. If you have any questions, the team have said they'll be happy to answer any questions post-event, but I would just like to remind you, please, to complete the feedback survey, just so we understand your views on the presentation provided. Barney has just put up the contact details should you wish to get in touch directly with AM Best post webinar, but it just leaves me to say thank you very much for attending today. Thank you again to AM Best, and have a good and productive afternoon. Thank you.
Thank you, Julia.